Hi everyone, a few days ago we have posted on the crowdfunding.com a RORA calculator. This is the calculator that allows investors to compare different loans investments with a different risk grade. And it also allows investors to estimate the potential returns given the potential loss due to the default of the borrower. In this video we will try to calculate the RORA for one of the Mintos loan originators, ID Finance. To do so, we will need the following data. Interest rate, which is the easy one, you can easily find it on the Mintos loan originator section, and we see that this is 12.1. So we are putting this in the calculator. The next one is probability of default. Probability of default is calculated by the lender crowdfunding platform using the historical statistical data. And if, let's say, 5 of 100 companies with a similar risk level went bankrupt, PD for such risk type of companies will be 5. Given that ID Finance is providing buyback guarantee, we need to understand the PD for ID Finance itself. So usually it's defined by the company's rating. And we can see that Mintos have assigned it rating 6.4 for the ID Finance. But unfortunately Mintos is providing a lot of different parameters, but it's not providing the essence. How likely this company will go default. Therefore we have to look in different sources, and luckily ID Finance has external rating provided by the Fitch. It's old one, but this is the best what we can get. So we see that this risk rate is a B-. And fortunately Fitch rating is also not providing the classical probability of default, but we can compare it. So if we go to this section, we can see that there is a EU regulation that is mapping probabilities of default with different ratings. And since the rating of ID Finance is B-, then we say that probability of default is 20%. If you invest in 10 companies with such a risk rate, then most likely 2 of them will go default. So we are putting the data here. Default by itself doesn't mean that you are losing money, because your loan is secured, and in Mintos case your loan is secured with claim rights towards end borrower. So we need to define how much money we will be losing if the borrower goes default. And I will be honest, this will be the pure guesstimate, because there are no much statistics on this. When investing on the platforms like Mintos, your one invested euro is secured with 1 euro issued to the end borrower. Usually banks, when they estimate the recovery from the debt sale, they assume that they will be getting 25%. But given that this company is specializing in a debt recovery, we will be more positive and will enter 50. But those of you who have invested in companies who has defaulted, please write in comments below how much money you were able to get back. So what we get? We see that risk-adjusted return will be 2.1%, which is actually lower than the deposits right now. I know that people from Mintos and ID Finance most likely will disagree, but then please provide the data which we can use for this calculation, and we will do it again. And even if I am not wrong, there is still the tools that can improve situation. For example, your each invested loan could be secured, for example, with 2 euros. And this will substantially improve the loss given default, and let's say it will be 20. In this case, rate will be very interesting. I know that it's not an easy task to calculate LGD and PD, but I hope that platforms will do this, and in this case it will be much easier to invest in those platforms. So if you have any questions, let us know in the comments, and please tell us which platforms we should review next. It's all for now. We wish you great day and successful investments. Bye.